Hi, my name is Deon Rebello, and this is the Bullion Vault. Hi, Willem, how you doing?
Well, and you, Deon.
Good, thanks. This is episode 19, and we are now into the middle, well, towards the end of the second quarter of 2025. It's been again an interesting time. I think over the last week or so, gold's been quite lateral. There's been a bit of pull downs, but it's very much running laterally. I mean, looking at the current pricing, it's around $3,230 an ounce. It's very much there that, and we've said this before, it's that rebuilding phase. It's almost that where spring gets retensioned and it starts to pull, and the more you wind it in, the greater the tension is, and then we'll start to move on to the next jump.
Yeah, we've seen the record highs. Obviously, there was the pullback as the profit taking kicked in. People were selling gold. I watched a video. When was it? Yesterday, actually, about somebody who goes to sell his gold bar at a dealer, and the I think the dealer said they're getting something like between 8 and 10 people coming in selling gold bars a day. So it just shows you how much gold is actually being sold, and for gold to still remain above 3,200 is quite remarkable.
And again, this is part of where I smile. I'm smiling at that thing because I always think of that other video we did, and this is where people realize an asset and they see a value and they monetize it straight away. Where we are like, don't hold on to it, rather monetize other assets than your gold, because of course we talk about gold being an inflationary hedge, an economic and geopolitical hedge, and so on.
Definitely, and the economic and geopolitical uncertainty tensions are far from over. I mean, we we hear talks of deals being announced, and that's in part what has caused the gold price to slump a little bit back to under 3,300. But let's face it, there's no deal yet.
Yeah, listen, I love our old Donald Trump DT. He's I may not agree with certain things, but he does give a good show. And a lot of the time, I actually don't think it, and I'm being quite sincere here, I don't think he really knows what he's talking about. He kind of definitely is good at what he does, and that's probably having the best people around him. And then he's got to go out and sell it, and he's got charisma, and he kind of gets people to buy into it. I do think there's a strategy that with the whole tariff thing where they wanted to just literally drop a bomb and see how it scatters and then kind of pick up the bits and pieces. Lawyers are well known for this tactic also, where they call it spraying, where they just throw anything at it and see what sticks, and then, oh, okay, let's go with that.
Yeah, I don't know if I agree with that. I just don't see exactly what they're after. I mean, yes, I've read some interesting theories about that. Some real conspiracy theory stuff. It was quite hilarious, but yeah, I actually think things just aren't going the way they thought it would.
No, and I think what's important is, and we're going to be going into, just there's been a new update on the reclassification of gold within the tiers. One tier is all your top investments, your top banks, all remain in that, and gold has been now repositioned into that first tier one asset, which is quite interesting because it changes the dynamics of what was considered. Gold has always been considered as an alternative investment, and this kind of really drives gold into the center stage, and kind of in our mind just means it's going to become greater buying opportunities. Thus, the price in gold will continue to rise as well.
So yeah, the Basel III system has reclassified it from, I think it was grade 3 to grade
Yeah.
1, and that essentially makes it money. It classifies it as highly liquid, and it allows central banks to hold part of their reserves in gold.
And more importantly, what that actually means is when it's a tier three asset, it would be classified like banks would hold gold, but they would value it at 50% less to the value. Now, suddenly, they can value it at 100% to the market value right now, which is a major, major step forward for gold.
Definitely, and all of this really made me think about, what is money, what is fiat currencies, what is it worth, and you know how does it compare? And I mean that got me, well, that, and the first 49 refugees from South Africa has arrived in America. And I was also wondering what's awaiting them there. How are they going to adapt to that? Because it's a total mind shift. If you go on holiday and you look, you take your money, you expect you're going to spend your money, it's going to be expensive, and when you come back, that money's gone. But they now have to retool their whole lives to adapt to this economic change. And I've done a little bit of research and studies, and it's not as I don't think it's going to be as easy as many of them expect from an economical point of view.
Okay, so let's get straight into that then. I think this is quite interesting. And again, this is part of that educational side of what we want to bring into the podcast is kind of like opening up and almost forcing a different way of looking at gold as an asset and how it would apply to general life. And this is a great example.
So let's start with money. Now, the first thing is, I mean, we've got US dollars, we've got rands here. It's sitting at 18 rand. I haven't checked this morning. I assume somewhere
It's
in the high 20s.
1824, yeah.
Okay, low 20s. Okay,
Yeah.
that's doing well, actually.
It's still holding in that band, so it's still very much in the 18s, rand to the dollar. And again, I've said this is where we've seen the rand strengthen. It would have dropped into the 17s, or previously even into the low 17s, in fact, into the 16s. It's interesting that it's dropping and it's staying still within that 18 rand range.
So, according to experts, then, economists, people who run the world economy, 1 rand or $1 is worth 18 rands 24. You should be able to buy the same thing with $1 as you would with 18 rand 24. And I thought, okay, well, let's strip this down to the bare basics. Let's strip this down to the poverty line. Now, as you know, the poverty line is the monetary threshold where that defines the minimum amount of money needed for somebody to not live in poverty. And I took a look at that. And in South Africa, it's actually quite interesting. We actually define it in 3 tiers. We've got the food poverty line, which literally tells you this is how much money you need to fuel your body and not starve. And that comes out to 796 rands per person per month.
Wow, I'd battle to see how 700 rand would actually feed a person.
It's it is shocking to think that that is the baseline with which some people, I mean, people have to get by with less. It's actually quite frightening if you think about it. And then we have the lower bound poverty line, which includes a few essential items like clothing and such. And then we have the upper bound poverty line, which includes your accommodation or your all of the above, and then a place to stay or something like that. And that comes out to 1,634 rands per person per month. Now, I mean, I can't imagine trying to survive on that per month, you know.
That's in my world, and I don't think I live excessive. Would be a tank of petrol or fuel, tank of diesel.
It is, and I mean that's it's quite insane. And what gets even worse is if we convert that to dollars, that works out to $89 a month.
Okay.
So that is the baseline, or the upper bound poverty line in South Africa, is people basically need $89 to live, to have clothes on their body, food in their stomach, and a roof over their head. Then we look at America, at the USA, and this is now why I'm saying I'm wondering how these refugees are going to find this economic shift, because it's interesting. They don't really talk about what's going to happen once they get there. It's I don't know if they're expecting they're going to land there and they're getting a little bank card with Trump's face on it and keys to their brand new farmhouse, or if that's what they were expecting. But basically, they got there and they were told, we advise you to find a job as soon as possible. And there's lots of jobs available in in customer services, in warehousing, and in manufacturing. Now, that doesn't sound like opulence and prosperity to me.
It's very much blue collar work.
So, but anyway, so that's the thing, and now I looked at the US poverty line, and That sits at $1,304 per person per month.
It's from $89 in South Africa on that same comparison, 1,000.
$1,304. So, I mean, that translates to 23,877 Rand. I mean, people would be jumping for joy. A lot of people would be jumping for joy if they could get that salary here.
Yeah.
And that's considered the poverty line.
Okay, but now, what would $1,600 afford you in the States, realistically?
That is considered the same, your basic food, clothes, shelter.
Okay, so living under the same conditions.
Living under, I mean, yes, you could argue that, maybe those conditions in the US is better. I doubt it. I mean, we've got we've got our informal settlements. They've got their slums. It's
absolutely
like for like. I mean, and this is the thing. I mean, the poverty line is 6.8% of that in the US. Now, you can't tell me that life or poverty line in the US is 93.2% better than here. So anyway, as I was saying, now the scary thing kicks in, and if you look at the average rent in the US, now this is the median value, so half is more expensive, half is cheaper. That comes to $1,625 a month, which is 29,700 rands.
Sure.
For the median rent. And obviously, I mean, if you're living sort of in that poverty line range, you're not going to be living on your own. You'd have your roommates, etc., etc. So you could see how that would work, but still, it's actually quite frightening. If you look at New York, the average rent for a studio apartment, now this is a studio apartment, one room except for the bathroom, and everything is in that one room, you're looking at $3,600 a month.
But let's put context here. I mean, New York is probably one of, if not the most expensive city in the world. We're actually looking at this recently, where, I mean, I saw a program where they were doing a penthouse apartment, and I kind of like thought, maybe $100 million, and I think that would be excessive. It came out at over $250 million for a penthouse apartment.
No, I'm just throwing. I understand what you're saying. I know New York is extremely expensive,
But I understand what you're saying.
I'm just throwing it out there,
Absolutely.
just sort of as a
person that's working in New York and having to
somebody
survive.
thinking I'm living in New York, I'm working in New
One
York,
of
I'm going to
those new
survive
refugees has landed
I'm going to New York,
in
I'm
the
going to
Big
find me a
Apple.
job,
Yes.
and he gets hit with 66,000 rands a month for a one-room studio apartment. That's absolutely insane. And that got me thinking, so how strong is the rand really relative to the US dollar? I mean, now we had, when was it, a few weeks ago, we had the Big Mac index, and then my own patented
The Willem
iPhone
Theron,
index.
Yes, iPhone index.
I can't put my first name on
it.
Sorry, I had help. Anyway, so
the rebranding of it, the Theron iPhone index.
Here we go. So we looked at that, and the Big Mac index came to $8.66 a dollar. That was the relative costs, or the implied strength, or the what do you call it, the supposed strength, what it's supposed to be according to that index. iPhone index came out to 25 rands a dollar. If you look at the poverty line, it comes out to 1 rand 25 to the US dollar to live on that poverty line. And I mean, if all of this was a discrepancy of 1 or 2%, then you could say, yes, fine, okay, I see that correlation, I see that difference in value being carried through across all sectors of everyday life. But it's not. I mean, we have 1 rand 25 on the one hand, we have 25 rand on the other hand, we have 8.66 sitting in the middle, and then we've got 18.24, which it is officially valued at. So it's the inconsistency, that absolute madness of this discrepancy that sort of gets us thinking, how is this calculated? How do they come up with these figures? Surely what food would cost you in one country should translate to what it costs in another country. And now this is why what we were talking about just now is actually very, very interesting. The fact that gold is now essentially almost, or well,
Well,
it is equivalent to money now.
So that will come in effect from the 1st of July this year, where gold will now be officially a tier one asset. And it's what's it called? It's the HQLA, high quality liquid asset.
And I mean, that makes sense to me because I did a little bit of a calculation to see how those two poverty lines translates into gold, because we always do.
Yes.
And in South Africa, that translates to 0.85 grams of gold per month per person. In USA, it translates to 12.5 grams. Now, here's the difference between a US dollar and a rand, which is so inconsistent in its value. And gold is 12.5 grams here is 12.5 grams there, and
Correct.
vice versa. And that's why I think it's actually, it just makes sense to allow central banks to hold some of their capital in gold, valued at 100%, because, I mean, let's look at what happened to Argentina. Had all of that wealth been held in gold, the central banks would have been much better off. But suddenly, the value of the peso plunged, and there's a crisis.
Yeah.
And that's what I'm saying. I think gold just offers that stability that seems to be completely absent in actual fiat currencies.
And again, I think this is very important, is we know that there is some looking at gold and the US dollar. Will there be a gold standard? Won't there be a gold standard? There's a reevaluation of all the US gold holdings, and that's all underway. So there's definitely something coming with that, and it makes sense because if they do have the available stock of gold, and it now is a tier one asset, suddenly they can value it at 100% of what it is versus what they were valuing. It was even a lot less, where it was at 40 odd dollars per kilogram.
And I think the biggest problem is they can't do that now. Gold is too valuable. Imagine if you went, we've just seen this run that gold is on. If you went on TV and you announced your beautiful plan that the US dollar is now linked to gold once again, and you can go to the bank and trade your dollars for gold, can you imagine what's going to happen? It's going to be a modern day gold rush. People are going to get trampled for people wanting to get in there and trade their dollars for gold.
Again, the concern here is, or the benefits to people that are currently holding gold is finite, and it has a limited amount that's on surface, and then also what's underground to be mined. And they've also found a massive, as we discussed last week, a massive reserve in China. So there is gold available, but it's finite. There's a beginning and end to it. There's what's available. And of course, that is the benefit. If you're holding gold, the value grows. And in a world where we see inflation, uncertainty, both geopolitically and economically, and we see that the markets are not 100%, that holding gold has shown to be the best hedge against these. Hence, that the reserve banks have been buying at phenomenal rates. I mean, the current value that I was actually reading earlier is, for this year so far, over 240 metric tons of gold have been accrued over the last nearly 2 quarters of this year.
It's mind-boggling to think of it. I mean, you think of a kilogram of gold. That would cost us 1.3 million rand, about there at the moment. 1.3 million rand at the moment. And yeah, I know the rand isn't worth much, but a million rand is still a significant amount of money. Now you think of a ton, 1,000 kilograms. That's 1.3 billion rand. And then let's multiply that by another 240 something.
Yeah.
That is, it's it's the kind of money that I don't think a person really grasps just how much it is.
So if you look at it, and we had to express, just for the sake of understanding the quantums you are saying, from a million to a billion to a trillion, what that actually really means. And I remember we did this as an expression of time. So if you had to take a million seconds, it would equal 11.5 days. If you then took a billion seconds, it would take 31.7 years. And if you took a trillion seconds, it would be 31,700 and some change years. So that's a difference. So we talk about these numbers so flippantly, like a million to a billion and a trillion, and yet the quantums and those leaps are that much greater.
No, that's what I was saying is, I mean, yes, the average person might be able to easily grasp what a million rands is, or $1 million or whatever. I know if I had a million rand, I could buy myself a little flat somewhere. I mean, I can't even buy a house, but I know I can buy a flat. So it's sort of, there's a gauge that we can use. I mean, if you even really look at it, you can buy yourself a nice car, but you can't buy a really nice car type of thing. So, we sort of have a gauge of what a million is. But already moving up to a billion, I think there's very few people who truly understand what that is, because you buy the nicest car, you buy the biggest home, and then you sit and you think, oh, okay, so what else am I going to do with the 950 million I have left, So that's where that leap begins. And as difficult as it is to actually grasp what a billion means, now add another three zeros to that, and try and understand what a trillion means. And as you said, now it's that leap from 31.7 years to 31,700.
Years.
And
Yeah.
and that's I think what makes it so difficult to truly comprehend. I mean, even 31,700 years, we hear it, we know that's a lot, but our little 80 or 90 or 100 years on the planet here, we don't really get a concept of what that's like.
Exactly. And if you put it in that context, I mean, we'd fall into the 31 years as a billion seconds. So you think about it, we'll be lucky if not to have 2 to 3 billion seconds of, yeah.
That's interesting.
That's a way of looking at it. So I think at least I can say tick to the first billion seconds, and I'm moving on to the second, or hopefully into that second billion seconds. Still a bit away, but I'm getting there.
Yeah, it's you know, we talk about money a lot. We talk about great quantities of money, and I mean 230 or 240 odd tons of gold. I mean, have you done any calculations on how much that actually is?
I'll do it. So as you're busy there, let me just do a very rough calculation of where we are with that.
Because I would be interested to know just how much that is in dollars, because as you said, these are reserve banks. These aren't, the average Joe in the street that's sort of buying an ounce here, 100 grams there, if they had a particularly good month or whatever.
Yeah.
This is tons and tons being bought by reserve banks.
Okay, so if we go by taking gold and taking it from ounces and we express it into kilograms, you're looking at about $104,000 per kilo right now.
Hmm.
So we times that by 1,000 to get it to a ton. That gives us $104 million
Per ton.
per ton. We then times that by 200, and I said it was 240.
240 odd something.
I'll get the exact number, 44. I need to turn my phone sideways to get the extra long number here. So it's 25,376,000,000 dollars.
That's quite significant.
And that's dollars. So if we had
yeah,
to then times that by 18 to really blow
I
the South
mean,
African mind out of the
would we
water,
get to a trillion? I wonder.
well, I'll let's do it.
Let's do it. I want to see if we get to that trillion.
Okay, so we now I hope I don't pull a Jay-Z on this one. Let me think about this. So it's 462 trillion 858,240,000 rands.
462 billion, half a trillion almost.
Yes.
We
So I
didn't
got
quite
it.
make it.
I didn't
Quite.
pull the famous Jay-Z and some. Let me again.
We'll let the viewers
Yeah.
decide that one because I heard something there. But anyway, let's carry on.
Should I read it again?
Try it once more.
Okay, so it's 462 billion 858,240,000 rands.
And I mean, my brain can't fathom that amount of money. I mean, what?
Yeah, listen, I mean that's the kind of money that countries can actually run on and would add significance to. But the important thing is if we go back now to the person that's investing and buying into gold, the important thing here, and from what we discussed today, it's interesting to put it into poverty lines because we start to actually see that there is disparities, and we know that. We know that from a first world company, a country to a third world country, you're going to have those differences. And what you need to survive on in a third world country is far different to what you need to survive in a first world country. That said, it is important that the accumulation of gold, and we always on about this, you don't need to be buying in big sums, but if you're doing it in small bits, those small bits become significant over time. And most importantly, in that is where we hear, and it's been unprecedented right now, that people are selling their gold, divorcing their gold, and so on, and all these kind of things that are going on in the markets. It's a ploy because people see an opportunity. Our message to you as a consumer, as a person listening to this, hold on to that gold, be it in the form of jewelry, be it in the form of medallions, Kruger Rand, sovereign coins, bars, whatever you've got it in, hold that value because that asset will grow and is continuing to grow and literally outperforming every other asset right now in the market.
I think our message is always, if it is at all possible, do not sell your gold, do not sell your silver. I mean, yes, we understand there are emergencies. You desperately need that money. It is liquid or a liquid asset, relatively liquid asset. And it's something that you don't need right now if you need the money more. So we understand that there's stuff happens. But if at all possible, hold on to it. And I think this is the perfect time for us to say we are not financial advisors. If you do any investing activities, do your own due diligence. Make sure you do your own research. Do not take the word of two guys yakking away on the internet. Do your own research and hold on to your gold.
Absolutely, and that's one of our biggest payoff lines is gold is wealth. This reclassification from Basel III is very clear that gold is now that high quality liquid asset. And for gold, it's a massive step forward from the evaluations, as we said earlier, where gold previously with banks, and I remember when we were looking into a specific financial product with gold, and we'd say there's physical gold, this is what it is, and they'd always give it us at gold, the current market price less 40, 50, 60. And of course that's what we're saying is that being a tier 3 asset, that's where it's sat. Now with this it comes in and it will be to market value.
And it's just always interesting to me as well how gold is viewed as alternative. You know, I mean, we've talked about this at length, and we've been setting up our online stores and this, that, and the next, talking to couriers, trying to get the whole chain set up, and we were running into so many problems simply because, for some reason, payment processes. Like, we talk to about 4 or 5 of them, and as soon as we mention gold, they're like, no, not interested.
Yeah, high risk product.
And it's just hilarious to me because we selling to a gram of gold for 2000, 2500. I'm not 100% sure what it is today's price, but round about there. I mean, yet it's fine to go to Macro or whoever it is, buy a 65-inch TV for 104,000 rand, and that's not risky. And you know we've talked about this so much, and it's always just interesting to me how it's viewed as risky, yet there are so many things that is so obviously a greater risk that is being viewed as a perfectly normal product.
Well, and again, this is a story, and I actually smile because, of course, we use couriers, we do national deliveries. In fact, we've done international also. But we were told there was a consignment of ours going to Durban, and we were actually notified. This is what, 4 years ago, where they said, of course, when they transported from the Highveld down to the coast, they put it in a big truck and they send it down. And this truck got hijacked. And what's funny is our package or our consignment was actually recovered. So I joked with the sales executive that works for that company on that services us, and I said they probably grabbed it and felt it was too light and threw it to the side and looked for something bigger and heavier, not realizing that that was probably worth more than a lot of the other things that were there. And again, that's that perception thing. That yes, there is risk in gold. There is risk if you're not vaulting it, if you're not having the correct house procedures. Where if you're going to vault it at home, be very careful. Make sure that very few people know that what you're holding. And again, we do not advise upon it because of just the nature of where we are as a country, but in fact within the world. I mean, you can go anywhere in the States, wherever, and they do always say, look for a reputable vaulting company to hold those type assets.
Definitely, and that I think it's one of the most important things that people sometimes don't reckon in, don't factor in when they purchase precious metals. If I was to buy, let's say I found some money somewhere, I want to buy 3 ounces of gold. It's three little coins this size, weighs in total less than 100 grams.
Absolutely.
I mean, it's less than a packet of chips.
Well, it could be like you say, or even a pack of wine gums, which I think about 70 grams. You kind of just over that in actual weight.
Exactly, and you think, okay, there we go, I've got my gold, but where are you going to put that? And that's what I'm saying. I think it's something that people really overlook is, where am I going to put this? I mean, sure, you can stick it in under your bed or, under your mattress or whatever. But at the end of the day, anybody catches wind of that, then it becomes a risk. So yes, do look for a reputable vaulting partner. Factor that into your purchase. And once again, this is where we come in saying, do your due diligence. If I'm going to hold this asset, what do I need to go with that? Firstly, it needs to be transported. Secondly, it needs to be stored.
And independent. We've been confronted within this country of other companies where they have a vaulting company. It seems like they're independent, but it's just a subsidiary business. And I don't want to go into accusations because it's pretty much in the press right now anyway, where a lot of those assets are resold and resold and not actually fulfilled within the actual vaults themselves. Again, that's where we talk about look for companies that are independent, that can actually evaluate it and give you that reassurance that it is under lock and key, and you know that it's there when you need it for that time when you're going to need it, and it's available.
Definitely. And once again, do your due diligence. It's as simple as that.
Just closing off, and I mean, it's another thing that came through this week where one of the analysts from JP Morgan has said with the current trajectory of gold, that they do foresee that gold should by 2029 reach a value of around $6,000 per ounce. Your thoughts?
At this stage, I'm not discounting anything anymore. You know, it was interesting a few years ago. We were looking at some projections, and you know, we looked at the low end, which oddly enough is always the World Gold Council that's lowballing it.
Yes.
And so we look at the low end, we look at the high end, and then we look at the ludicrous. And you know, at that stage, I think gold was sitting at just under
I was
$2,000
going to
an
say it's around
ounce. Yeah,
1900 odd dollars
I
an
think it
ounce.
was sitting round about there, and there were these projections of $5,000 an ounce and $10,000 an ounce, and we looked at them and we went, "Come on, seriously, where did you get that number? I mean, really?" And at the beginning of the year, we were sitting at around 2,200, I think it was, dollars an ounce. And we were looking at projections of 4,000 saying, come on, where do you get these numbers? And suddenly we're looking at it and going, might be a bit low.
Well, in fact, I mean, the same analyst has said by 2026, within that second quarter, the expectation on the low end is around 4,000. On the extreme, they're saying 4,500. I'm like, hold on. We've just gone through a phase where it literally went up near close to $1,000 an ounce, and you saying on extreme cases it's just a jump of 500. Again, these are, and as educated as these people are, and I'm sure I'm not discrediting them for what they know, and they give a lot of input. But the markets are volatile. There's so many different factors that contribute to the rise and fall of prices. Even the rand, we've gone through that many times. Currencies, there's many factors that influence the rise and fall of those currencies, or strengthening or weakening of those currencies. And same with gold. Same with silver. We know that even within the LBMA and the COMEX within the states side, that a lot of those they have certain holdings, but there's a lot of gray area, and this is where, interesting enough, where Basel III came into being, well, not into being, but where it started to give a lot of focus onto gold, probably about 3 4 years ago, where they were starting to say that there was a lot of gray area within even the LBMA, which is the London Bullion Market Association, on their holdings, where they could not actually quantify or qualify some of the actual holdings.
I mean, as we've said before, and we've said this many times, if you could predict exactly what it's going to do when, exactly to where it's going to go before dropping back, etc., etc., you would be the richest man that has ever lived many times over. And as you rightly say, we've got people, highly educated people, who have built models, who have dedicated their lives to predicting the movement of the gold, of the stock markets, and all of these things, you know, figuring out where the bottom end of the Fibonacci sequence is and what it's going to. And at the end of the day, it's an educated guess at best.
I was just thinking as you're saying that, I think about Back to the Future, and old, what's his name, Marty's adversary,
Oh, Biff.
Biff,
Biff.
where Biff steals
The calendar.
it was called the,
It was the sports
yes,
almanac. Sports
almanac,
almanac, yes.
and he goes from 1965,
Yeah.
when he steals it,
Yes.
and then of course he goes back into the future and so on, and the whole future's taken off, or like veers to that whole new world where he's the ultra rich man, and he predicts every single event of that year and becomes one of the richest men alive.
And yeah, that is exactly what would happen if you could predict exactly what gold's going to do. I mean, imagine start of the year, you knew exactly what it's going to do, and you pumped every single thing you owned. You took out as much loans as you can, and you put everything into gold. And you waited until it hit 3,500 and you sold all your gold. You would be sitting with a significant profit.
But again, this is that story, and we don't advise on that. I mean, we're not financial advisors, but common investing is very simple, is about mitigating risk. If you put everything into one thing as you're proposing in that scenario, that's gambling. And I mean, the amount of people I've heard that have done that with Bitcoin and various other assets where they're booming and they think, oh, this is my payday, and they literally rebond their homes or remortgage their homes, and they try access as much cash as they can, and they push it into it, and the price falls.
This is the thing, we've talked about the Kindleberger Minsky model before, of booms and busts, and unfortunately the stage at which people tend to do this, it's way too late. And yes, do not put all your eggs into one basket. It is literally as simple as that. As you said, it's literally gambling. You could lose, you could win, but if you lose, you're going to lose everything. So everything in moderation.
Absolutely, and I think that's a good way to end off this podcast. Just in closing thoughts on anything specific.
If you liked the video, hit the like button. If you want to see some more, consider subscribing, and we'll see you guys in the next one.
Thanks and take care. Bye bye.